At a time when the US dollar is weakening globally, one would expect the market currencies like the Indian rupee to catch a break. But the reality is playing out very differently right now. Instead of gaining strength, the rupee is hovering near its lowest levels on record. On 24th of September, the rupee closed at 88.74 per US dollar after hitting an intraday low of 88.80, inching closer to its all-time weakest point. This drop comes just a day after rupee hits a record closing low of 88.73, underscoring the persistent downward pressure weighing on India's foreign exchange markets. The paradox is stark. The US dollar has been weakening steadily against a basket of global currencies throughout 2025, yet the rupee has been sliding further. Let's dive into what are the key drivers behind the weakening of dollar. The dollar index, which measures the US dollar's strength against 6 major currencies, has been steadily declining throughout the year. So far, the index has fallen by 11.3% year to date and dropped roughly 7% since April, signaling increasing worries about the outlook for the US economy. Now, this includes rising fiscal deficit, weakening growth prospects, and expectations of further interest rate cuts by the US Federal Reserve. Now, despite these conditions, the rupee kept weakening, going against the trend seen in most other currencies. But why isn't the rupee benefiting from the falling dollar like it usually does? Let's break it down for you. Now, to begin with, the US government imposed higher tariffs on Indian goods, sparking worries about the competitiveness of India's exports and the potential strain on its trade balance. Second, and more directly hitting the Indian economy, the US sharply increased H-1B visa application fees, now soaring to $100,000 for new applicants. This steep fee hike poses a major challenge to India's massive IT sector, which depends heavily on sending skilled workers to the United States. And to make matters further worse, Washington also announced plans to revamp the visa selection process, prioritizing higher paid and more specialized workers, further complicating matters for the Indian professionals. Now, these policy moves have fueled fears of reduced outsourcing opportunities and higher costs for Indian firms, triggering a sell-off in IT stocks and broader market weakness. Another major aspect to focus on is that foreign portfolio investors have been steadily pulling money out of Indian markets, adding further pressure on the rupee. On September 23rd, foreign investors offloaded 3,551.19 crore worth of Indian equities, the largest single-day sell-off in September. This recent wave of selling has pushed total net equity outflows for the month to $1 billion, bringing the year-to-date foreign sales to around $16 billion. Now, the scale of these outflows has put continuous pressure on the rupee, limiting its ability to benefit from the global dollar weakness. With these existing challenges weighing on the rupee, careful policy decisions and market responses will be crucial in stabilizing India's economy and restoring investor confidence in the months ahead. What are your thoughts in this video? Do let us know in the comment section below.
If you like this video, then like, share and subscribe to ET Now.